So, should we do like Elon Musk and add cryptocurrency, in particular in his case, Bitcoin, to cash or to portfolio? That's the question. I was out today meeting a company, a CEO of a company, and doing an interview for Business DNA. I rushed home to go through this presentation about crypto. So, welcome here. Now, I wanted to say that if you got any questions or anything you want, feel free uh, to ask any question. And I see Jim Stent there, one of the most expert guys I know in the field of banking in particular, and also China and Thailand. The question we are all asking, yes. And there's Hillary. Good afternoon, everybody. Yep, good to see you guys. So let's get started. I'm going to walk through a few things. And one of the things about talking about crypto is that, man, it really fires people up. So if you've got opinions on it, feel free to share it, or have any questions, let me know. And I'm going to try to go through it in a reasoned approach. So this is a question: should I, and let me just get rid of that caption, should I do like Elon Musk and Tesla and add Bitcoin to my portfolio? All right, well, that's a good question. And here we can see Tesla buys 1.5 billion in Bitcoin, plans to accept it as payment. Bitcoin spikes 16% to record high after Tesla says it invested 1.5 billion in the cryptocurrency and will begin accepting it as payment. Tesla buys 1.5 billion in Bitcoin. What could possibly go wrong? And Elon Musk's plunge into Bitcoin is a dangerous bet that could saddle Tesla with big losses. Now, before we go into the text of what I have, I've gone through the financial statements of Tesla to try to understand how they're accounting for this. And the way they're going to account for this is basically at cost. And if there is a fall in the cryptocurrency, then they're going to have to mark it to market, or mark some impairment to that. So there's real losses that these guys could face with this cash that they're holding. And I think one of the unique things about this is that, we're talking about corporate governance too. And Marky is saying, is this live? And the answer to that is yes. Now, I'm going to show for a moment what Hillary is saying, which is Nigeria's central bank just banned crypto. So one of the ways that central banks and countries can deal with it in their country is, if they decide they want to ban crypto, they can do it by basically not allowing the banks to have accounts with the crypto exchanges. So that's recently just happened in Nigeria. And I think you can see it wasn't Hillary only that said that, but we've got others who have said that, right? So now let's look at that for a moment and go back to what I was talking about. So let's talk about it from a, normally when we talk about Bitcoin, it's like, I'm going to make a ton of money, but I want to talk about it from a diversification benefit perspective. And as Harry Markowitz said, diversification is the only free lunch in investing. For diversification, of course, to be the free lunch that Markowitz is talking about, then the added assets must have low or no correlation. So what I decided to do for this talk today is to look at the four main asset classes here over the past 30 years. That's equity, stocks, bonds, commodities, and gold. Now, you may have a different way of looking at it. For instance, some people add in REITs in there. I wouldn't add in REITs because REITs are already represented in stocks or equity markets. And so I don't see a lot of diversification benefit there. The other thing is, we also could add a property, but most of us already have some sort of property. But we can see the clear winner, of course, was equity. What a bull run it has had. And the clear loser has been commodities. And so that's the situation. So what I wanted to do is look at that a little bit more by bringing crypto onto that. And here I basically said, if we rebase crypto to 100 on July 2017, when volume was over $1 billion a day in Bitcoin and the price was 2,900, we can see that the most recent point on this chart is December 2020, when Bitcoin was 19,060. Now, I've rebased this chart to 100 so that we can compare the different asset classes. But of course, we do have this huge boom that's happening in Bitcoin. And I'm using Bitcoin kind of as a proxy for digital. I do have some ideas about the way that you could construct portfolios, but Bitcoin is probably the best one to look at in this case. And over the past 24 hours, Bitcoin has hit 48,000, its peak, and that's partially driven by Elon Musk. So let's look at it as an asset class. The checklist that we really want to look at from an asset class perspective is, does it have low correlation with other asset classes? Does it have similar characteristics of assets within the class? And does it have a unique risk return pattern versus existing asset classes? And does it enhance the risk adjusted portfolio return? So to try to answer that question, let's look at the first one, and that is correlation. So I went back over time. I believe that we're looking at the correlation since 2011 in this. And what you can see is that digital, meaning Bitcoin in this case, is showing basically a almost no correlation with all the other asset classes. And so what we can see is stocks and commodities move together. Strong dollar means weak commodities in gold, and gold is a good diversifier. You can definitely see that from gold, and the correlation between the existing asset classes and crypto is low, making crypto a distinct asset class. As far as the checklist is concerned, I would say low correlation. We can check that off and say, yes, it meets that requirement, right? So, all right. And I see Nasan. Well, thank you. You're welcome for this. Now, let's continue on. Let's look at the next one, which is similar characteristics. Now, this is a little bit tricky. What I did here in this case was to try to see the movement of Bitcoin relative to Ethereum. And what we can see is that over the last few years, it has been highly correlated. There was a time where Ethereum was coming up and the correlations were lower. And we can add to this. Right now, we just have Ethereum, but we can add to this and try to understand. But generally, I would say they move somewhat together, at least in this case. And then the next thing is we want to test to see if a small allocation of crypto can enhance risk-adjusted returns significantly. Because if it can enhance it significantly, that's pretty significant. So we conducted this research on how adding cryptocurrency impacts the risk-adjusted return, and we do this by constructing 3 portfolios with different risk exposures. This is from 2011. So what I'm going to show you here is 3 different portfolios. There's a low risk portfolio where it's mainly bonds, 70%, only 10% equity. There's a neutral portfolio, which is 50% equity. And then there's a high risk, which is 90% equity. So this is how I would say, if we wanted to set up these portfolios before we even test the addition of crypto, this is how I would break them down. And then at the bottom of this, we can see the risk-adjusted return goes all the way up to 0.6. 0.6 risk-adjusted return for the high-risk portfolio. Now, I've got crypto added in there, digital, and what you can see is that if we had 100% of our money allocated to digital, it would have been up 167.6 from 2011. And remember, we're talking about Bitcoin. That's average annual return. But the standard deviation is massive too at 116. So that gives us a risk-adjusted return of 1.4. Now, from most of you guys who are experts in the world of finance, you know that actually standard deviation really isn't risk. It's just volatility. So we could say it is volatility adjusted return. And of course, I'd rather have an asset that's going straight up than an asset that is some combination, or let's say a lot of ups and downs. So from a unique risk return position, I would say it is somewhat unique. Finally, let's see if we allocated a 2% allocation to crypto, we would see that, let's say for the low risk portfolio, it would go from 0.1 in the risk adjusted or volatility adjusted return up to 0.9. So there's the biggest impact is happening in the low risk portfolio because we're putting in a pretty high risk asset. So it's probably better to look at the high risk portfolio, which has a risk adjusted return of 0.6 and it goes up to 0.8. So yes, I think you can say that there's just adding in 2% of digital currency or cryptocurrency over the past period has enhanced the risk adjusted return. So I'm going to wrap this up and then I'll go to questions and chat in case there is any. And the key points that I'm saying is digital currencies have unique risk return relationships and moderately low correlation with existing asset classes. They meet requirements of a distinct asset class. Generally, if we got even tougher, we may find that it's borderline, but based upon what I presented to you today, I would say they do meet that. Consider crypto as part of investment strategy, but beware, of course, it's extremely volatile. So the bottom line is, if you want to participate in the upside potential of cryptos, just a 2% allocation enhance the risk-adjusted return. So I'm going to stop there and ask if there's any questions at this point. Feel free to ask any questions that you may have, or if you have comments. Let me just go through and look at some of these. So let's see. Here we've got, okay, so Nasan said, thank you, Andrew, for giving your opinion on this issue. You are welcome. All right, then we have Michael Roberts, who says, although no intrinsic value based on a federal judge decision, Bitcoin is similar to a commodity. So, Michael, what you're saying in this case, I believe, is that basically a commodity doesn't really provide income, unlike, let's say, a bond. And therefore, you could argue that Bitcoin is a commodity. But remember now that bond yields are so low that you could even argue that bonds don't really provide that much of a yield. All right, there is Shan. Hi, nice to see you. Excellent stuff. Michael Roberts, again, let's see. I think you should define crypto linked to an underlying value as ones with no intrinsic value. Yes, I agree with that, and there is more work that we can do to look at the different cryptocurrencies, but I would also argue that Bitcoin is probably the best one to show. I think the decentralized nature of Bitcoin makes it the one that's most interesting to me. And Michael, if I talk about constructing a portfolio, one of the ideas that I've looked at is just looking at Bitcoin plus 2 or 3 others that account for maybe 20% of a portfolio, and maybe even just weighting them by market cap. All right, well, those are some thoughts. I welcome your thoughts and comments, and if you've got questions, let me know. And I just hope you have a great night. It's beautiful time in Bangkok right now, just about to go out and have a delicious dinner. You have a great night or day ahead.